T minus 60 seconds. T minus 50 seconds. T minus 40 seconds. T minus 30 seconds. T minus 20 seconds. 15 seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 0.
Ladies and gentlemen, I literally just coughed right when I was about to talk right now. But ladies and gentlemen, welcome to the 5 Foot Viking podcast, where we get to drink a beer and learn something new. And tonight is all about learning something new. I'm very excited to learn about some finances and some investing and some really good nuggets of knowledge that I think everybody can really benefit from. So, but before we get started with that, I just wanted to let everybody know that the 5footviking.com is up and running, not completely with merchandise yet, but you can go to the 5footviking.com, and there are some interesting things that are happening with podcasts right now, where I'm all of my podcasts are up with the videos on Facebook and on YouTube. And you can also go listen to them on Spotify. You can go to anchor.fm, where that is a platform just for audio podcasts. You can look at it on Google Podcasts and Apple Podcasts and all the good stuff. And Spotify is coming out with an option where I believe in the future, in the very near future, I'll be able to have my podcast with the video as well as the audio up on Spotify. So for all of you guys that are supporting by listening to the podcast afterwards, first and foremost, thank you guys so much for tuning in, supporting the 5 Foot Viking, and for the people that are in other countries like Japan and Mexico and Spain and France and the UK and Canada. You guys are amazing. Thank you so much for taking time out of your day and listening and watching this little 5 Foot Viking over here in California talk about some good stuff. So good stuff there. Thank you guys for the support. I'm going to take this down. And for all of you who tune in on a regular basis, it means a lot. Thanks for being here. Thanks for joining me and learning something new. Today is going to be fun. I have a very good friend of mine, Mr. Dean Kumagawa. He's going to be my guest today, and he's the gentleman who literally put me on the straight and narrow. We'll talk a little bit more about that in the future of this podcast. But literally, being a musician and getting paid cash, sometimes it burns a hole in your pocket. That's for sure, and we'll get into that as well. But after meeting with this gentleman, he kind of just held the mirror up to me and was like, "Hey, man, so where's your money coming from? Where's it going? What are you doing with it?" And wow, that was a wake up call and a half. And I did a lot with the knowledge that he gave me. So I'm very, very excited to have him on this podcast and help educate all of you and all my friends that are out there and answer any questions that we can. I want to make sure that I get this right. Mr. Dean Kumagawa is he's an LPL Financial Advisor. And he works for a company called ABP Financial Services in downtown LA. And let me bring Dean on right now, ladies and gentlemen. Please put your hands together. Mr. Dean Kumagawa, thank you so much for joining me, my friend.
Hey, Whit. How's it going?
Things are great. Really, really great. Been getting a lot of stuff done and studying my ass off so I can be smart and drinking beers, because I'm not that smart. But
well, thanks for having me. Like I said, I don't sure I could take credit for putting you on the straight and narrow, though. I think maybe Marlene had a little bit more to do with that. But thank you for the kudos there.
Absolutely. Me and Marlene, we did a great job in the past of, we tried to have one foot in the, live for the day and one foot in the, plan for tomorrow. But, I think I was putting a little bit too much weight in the live for today side. But literally, once we met with you, that was a massive wake up call for both of us. And it was pretty impressive to see what came out of that. So, just wanted to acknowledge a couple people that are joining in. I love this. Miss Jessica Knight, here to support Wit and learn something new. Cheers to learning about finances. I love it.
Oh.
Thank you for tuning in.
Thanks for joining us, Jessica. I got to
Yes.
put my glasses on though.
It's all good. All good.
Can't see.
Mr. Alberto, a huge fan, huge friend of the family of the 5 Foot Viking. Thanks for being here. Mr. Eddie Stevens, love you, brother. And my wife chiming in from the other room. Hi, Dean. Thank you for your advice. It changed our lives. This is good stuff. Mr. Boris with the horns, got the horns up. I love you, buddy. And my sister Shivani up in Utah is tuning in. Thank you so much for being here.
Cool. Wow.
This is good stuff. We're going to have some fun with this. But I mean, before we really get started with anything, we have to go to the first segment, which is the beer segment.
Oh, yes.
Beer! You're allowed to drink beer?
Anybody got a cold beer?
Another.
That is a beer.
Squad.
Well,
everybody.
sorry I didn't follow the instructions, but I have sake. I hope you don't mind.
That is perfectly fine. I was actually just going to ask you. So, what's your poison for tonight? What are we hanging out with?
It's something I just picked up at the Japanese market. Kaigen sake, 13.5% alcohol though. So I'm going to be sipping this.
You better, yeah. You're going to be sipping by the end of the
So-
by the end of the podcast. You're going to be like, put all your money on black. Just
There
take
we
your
go.
whole savings to Vegas.
Ooh,
How's that? Is it
Good.
getting you there?
fruity.
13%.
Cheers.
Well, yes, skull, my friend. Thank you so much for being here. I am once again, ladies and gentlemen, I am on the St. Archer kick. I got the St. Archer. Today is the hazy IPA. This one is definitely much smoother than the regular IPAs that have that bite to it, but this one is 6.2%, and
Cool. That's pretty good.
I'm enjoying it. So for your one drink, I'm gonna have to drink 3 of these. So,
All right. That sounds about right.
but awesome. All right, well, let's get into some stuff. I wanted, we go back a long ways, but I would love to have to let everybody else know a little bit more about Mr. Dean Kumagawa. So we're gonna go into the section becoming the advisor, and first couple questions are, you've been an advisor for a long time now. We can get into that, but where did you were you born and raised here in California? Did you grow up in another state? Did you go to college for this? What kind of jobs did you have? Were you always into finance? So many questions here.
I know that was a lot. Okay, let me start. I was born in East LA,
All
St.
right.
Vincent's Hospital, or I guess downtown. I grew up in Montebello, went to Montebello High, and graduated from UCLA with a degree in economics. My first job was with a mutual fund company, which was really interesting. I got to do the books and keep track of all of their trades and how they did profit and losses. But the great thing was that I got to be exposed to the world of finance, where we traded pork bellies and cocoa, and currencies were the most interesting to me. They're the most complex. But I got to be exposed to that world and saw how things work and how people make decisions on making trades, and basically just how people manage money out in the real world. It was a good learning experience, and I did that for a number of years until I stopped and went to go work at the sales desk of a large insurance company, let's say. So I worked at a couple of different insurance companies, some large ones that you've heard of. I was marketing director, product managers and product marketing managers. But when the financial crisis came in 2008, I was laid off and, unfortunately didn't make it through that unscathed.
Wow.
But then I decided to go out on my own and become a rep. And it's been great. It's been fun helping people. That's the reason I like doing this. Helping people like you and Marlene, just need a little nudge in the right direction. That's really fulfilling for me. And that's why I do it. Just to get that.
That was definitely, we always talk about, there's pivotal moments in your life, and literally going and meeting with you, that was a pivotal moment in our life. And I can speak for Marlene when I say that. It's literally, it was, and like you said, maybe it wasn't a huge, it wasn't a lot of effort for you, but at the same time was a massive difference in our life with what the knowledge that we came out of.
Actually, when I met with you guys, I instantly really just enjoyed both of you, and you could tell that you guys really cared for each other. I mean, you're my ideal client, except you didn't have money at the time, which is fine because you had everything else. You had the will, you just needed a little direction. I just pointed you in the right direction. And, as the beginning of that was just talking about a budget.
That was huge. And, let's jump into that. That's something that I wanted to, but first my little sister has to let you know that we started every morning with sake when we were in Japan. My little sister, she was in
every
Japan.
morning. Wow.
Every morning.
Okay.
Well, she was also on vacation, so she's allowed. But she, a couple of years ago, I think she was out there, and that sounds like a great time starting every day with some sake. I'm okay with that.
I didn't do that, but a lot of times we started our day with, I was there in the early 90s on vacation for a couple of weeks, and I love rice and I love fish, but when you have it for breakfast and dinner,
Right.
I got sick of it after a week. I was like, okay, I've had enough fish.
Yeah.
As much as I like it.
Right. I think that's me with some of these. So I've been drinking a lot of the IPAs lately, and
right.
Yeah, I think maybe next week I might have to go with something a little bit different. But
those taste good though. I like the flavor of the IPAs.
They are, and that's one thing. That's another aspect of this podcast that I love, trying new beers and trying new, because right now there's so many out there. We just moved out here to the Palm Springs area. There's a lot of Coachella, a lot of breweries here in the Coachella Valley, and there's some great tasting beers out here. Some good companies coming up with some good stuff. So,
beer is actually really good when it's fresh.
Yes, indeed. And to me, beer is good.
When
just,
slightly
any kind of the day. And Jessica chimes in here and she says, "Thank goodness you graduated from UCLA. Boo USC. I knew this was going to happen.
Go Bruins." Now, one of my best friends went to SC, and my brother and sister went to SC. So, what are you gonna do?
My pops is I don't know if Dad's on here yet today or not.
Is he a SC fan or?
Yeah, I got some family up here, but it's I'm also double checking, making sure that everything, because sometimes with all this technology, I have to make sure that everything goes to the right.
This is my first podcast, so I hope I don't screw up your podcast.
No,
here.
I'm sure you're doing great. You know what?
I don't even know where to look. I'm like, do I look at the camera?
I'll tell you what. I think sometimes. Let me just double check. And if anybody, if you guys are all watching right now, if you're on Facebook, do me a favor. Follow all the links until you actually get to the 5 Foot Viking page. If you get to the 5 Foot Viking page, because sometimes you'll be able to see it on my personal page, but if it's on my personal page, sometimes I don't see all of the comments. I'm just trying to make sure. So anyways, to let everybody know that if you want to make sure that your comment is seen over here, please make sure that you're commenting on the 5 Foot Viking page. And then I'll be able to see everything here. Sometimes I don't see them and I'll go back to them later. But if you want to see them real time, I do my best to bring them up here and we talk about them. We have fun, especially tonight. We've got a lot of questions from a lot of people and there's a lot of information here. And I want to make sure that we connect with you guys. So, here we go. Dad's here. My dad, Mr. Bruce Patrell, UCLA, the University of California for Lower Achievement, or USC, University of Spoiled Children.
Those are both classics.
Yep, Dad's got all of them. My dad is the king of the dad jokes, and Dad, I just want to let you know that is not approval for you to just start putting all your dad jokes in the comments. I love you. But let's jump into one of the first topics that I wanted to talk with you about specifically was budgeting. And like I said before, when we came to you, we didn't have a budget really. I think the only time that I ever really did a budget was I was maybe 17 years old or 18 years old, and I was trying to move out of the house, and I was trying to just make sure that I made enough money to pay the rent at this other spot. So I literally sat down and made a quick little budget, and I'm like, okay, cool, it works. And then literally I threw that away and I never did it again. But that was one of the hardest things, was because at the end of the month, I felt like there wasn't enough month at the end of the month to save any money, or to sometimes, because as a musician, I had cash all the time and I was just paying for things. Oh, I got enough money in my pocket. We'll buy this. Oh, you want to go out to lunch? Oh, let's go out to this. And I had no budget for going out to dinner, or no budget for this is the stuff that we need to buy for the house, or nothing like that. So if you wouldn't mind, would you please go through just a few quick steps, of tips where anybody who's watching this, they know how they can get on the straight and narrow as far as their budget goes with their personal finances.
Yeah. As you know, what I always recommend is it doesn't have to be formal, but it can be. It's as formal as you want it to be. Some people keep track of their money down to the penny every day or every week or every month. I don't recommend that. But you just have to know that what is coming in is more than what's going out. And it's okay if you have expenses that are temporary or that are, going to disappear in the future, or maybe some will come on in the future. You have to have your budget so you know where you stand. It's the ultimate starting point. You have to know where you are on a monthly basis, positive or negative, whatever your cash flow is, that's where you start. So putting the budget together is just what's your income, whatever your sources are, whether that's your W-2 or your 1099 or your cash, whatever you have. Put that in, and it's best to do it on a monthly basis. And then put all of your expenses down. For most people, the largest is their rent or mortgage. So whatever your monthly cost is there. And then, your car payment, your insurance, your house payment, your house insurance, go down. Some people have every one of those. Some people only have one or two. But go down to your, after your car payment and insurance, look at your phone bill and your cable bill and your any other bill to see that it's really something that you're still using. There's all of these services that we have to subscribe to now. Make sure that you're not being overcharged for stuff. I have a couple of examples on my mother's own account for cable. We had asked to take this was a couple of years ago, one of the HD boxes away. And they said, okay, no problem. They do it. And I looked back on the bills and they had been overcharging her for about 9 months. And they said, oh, I'm sorry, we can only go back and fix it for 3 months. So stuff like that, where you're getting charged for something, make sure you review your bills. Another case is where a client was paying for an extra telephone line because they had a fax back in the day. Well, after they got rid of the fax, they never canceled the phone line. So they were paying for an extra phone line for several years. So review that. And plus, if you're paying a large phone bill or cable bill, there are many ways to get those bills down with streaming or, low cost plans. One of the things I talked to Whit and Marlene about was Mint Mobile, Mint.
Yes.
The software to do your budget. That was one of the first things that I said, you might want to look at that. And I think you guys used that, didn't you, Whit?
I was actually going to ask you if you had any recommendations like that, because when you were talking right now just previously about your, you go down the list of the things that you pay for. So you've got rent, you've got car payments, insurance, things like that. But when you start getting down to things like electricity, water, things like that, things that fluctuate. Do you account for what you think your max will be for the month? Because we just moved out here to the desert, and our AC bill, like I'm not even going to
Oh,
tell you what it
man.
is, but it was like 3 times the amount or yeah, like 4 times the amount of what we normally paid by the beach. So that was like a huge but also we're saving on other sides where gas from driving back and forth, things like that. So things kind of balanced out for us. But when you're doing your budget, do you just how do you allocate for things like that fluctuate?
Yeah, it's very hard for things like that, or for people who are on, um, incomes that fluctuate, like musicians or
Yes.
salespeople, people like that. So, yeah, it's good to put away what you think is a, prudent amount, or what the average amount might be. The idea is, again, that you're taking in more than you're putting out each month.
Hmm.
And, sometimes you have to make investments. That's okay, as long as you know what the plan is. So,
Yeah.
yeah, whatever you want to use to do it. We have some clients doing it on Excel spreadsheets. You
Hmm.
could use Mint, or you can just do it in your head, depending on how good you are at keeping
And how
those things
many
straight.
and how many
And how
expenditures you
exactly?
have. You don't want to
Yeah, a single person, it'd be easier than a
the
married couple
family.
with a bunch of kids. You'd have to
True.
have something.
Well,
But
I
yeah,
mean,
as long as you have a good idea.
I know that we used Mint, like you were saying. I'm more of that. I love using apps and things like that, so that worked for me for a while until I started micromanaging myself, and I felt myself spending way too much time on the app itself, trying to figure out where to categorize this and where should this go and where should that go, and I felt like I was just wasting a lot of time versus what good that would but that was just for me. But I found lately that if anybody has like Microsoft Excel or Microsoft Word, there's a lot of templates that they have that are very useful, very very useful. I ended up opening up not even Excel. I think I opened up a Word document, and they had a really really good template to and I think getting down to the basics of this, it's more just like put it up in front of your face so where it's coming from, whether you have a W-2 income or someone like me. It's weird because I kind of go backwards, where I look at all of the expenditures and I'm like, okay, I have to make this much in order to get by today and or get by this month. But other people, they have how much money comes in per month, and they're like, okay, now we can allocate to, we only have $50 to go out to dinner, or we only have this to go that. But for me, when we sat down with you, that was the most powerful thing when you said, write everything out. We sat down and I'm like, oh my gosh, okay, well, we pay this much for this and this much. And then it started getting me think, like you said, oh wow, I forgot I'm paying for a gym membership that I never go to, or I'm paying for something
Mhm.
that, oh, what's this? Um, that is super important with your budget.
Yeah. Besides reviewing your cable and cell phone, which are fairly easy, if you haven't seen your insurance guy for your home or your car,
Hmm.
they might be able to adjust your policy, or your deductible, depending on your situation too. So, if you haven't done that in a while, it might be something to look at.
To reach out to the like car insurance and stuff.
Yeah.
I
See
heard
if you
that. I
got the
heard
best
also
deal.
that they every now and then, like especially if you don't carry a lot of revolving debt on credit cards, sometimes and if you're making good payments, I heard that it's beneficial to reach out to them to ask them to lower the APR, and sometimes they can, sometimes they can't. Is that something that you would recommend doing, maybe annually or something?
Yeah, I haven't heard about that recently, but yeah, you could definitely ask your card company, and
Hmm.
sometimes they'll do it if you've been a good client, or they have some specials going. Sometimes you'll call at the right time, and yeah, you don't get it if you don't ask. All they can do is say no. But
Hmm.
yeah, I think if you're proactive, they like that, so you could probably get a good deal.
Okay. I mean, that's definitely just that's an asset to this big topic of budgeting, because that will just literally just save you some money. But I think the gist of the budgeting is to get a real picture of what's coming in and what's going out, and
Right.
Trust me, when you helped us through that time, I remember going home after that and talking with Marlene about, okay, all right, now we have a snapshot. It's real. We know where to go from now. And if you don't know where you're, and I think that was one of my biggest problems. If you don't know where you're coming from and you don't know where you're going, you're kind of just in limbo the whole time. And that was,
Yeah, you didn't know where to start.
no, I had no idea where to start. I was just going through this thing called life and just like, hey, I got some cash on me. I made some cash last night. I wasn't worried about tomorrow. I was just kind of moving through the whole thing. But, putting up that mirror and knowing where I'm coming from and I always had a goal. I always knew I wanted to move on and do something else. But, I probably wasn't until me and Marlene got together that I realized, okay, we need to create a future for us.
Well, I think you didn't, or you left out one little bit of the story, which I really liked, is that you posted your budget on your refrigerator.
Oh man,
right? I mean, and the next time you came and saw me, you told me about it and how you're tracking it on your refrigerator, and I think that was huge in you guys committing to it. I don't know if that works for everybody. Some people don't like to have it out in public, but for you guys, it worked, and you guys jumped on it and killed it.
We picked up one of those like write on wipe off boards.
Yeah.
And Marlene's got much better handwriting than me. So we had her write, and it literally every account that we had, our cars, our credit cards, our everything. And we wrote over, we got pretty crazy with it. Like, when's the due date? When's the bill? What's the minimum payment? What are we going to pay? Like, we got a little bit intense with it. But it worked for us. That's what worked for us. And we put it up on the wall. And I can't remember. It might have been a couple of years that I think I remember taking a picture of it when we had knocked off a great amount of money. And I remember texting you the picture and like, here, just so you know, this is all your fault that we're doing so good.
Well, the other thing I liked about working with you guys is that, like I said, you can tell you guys really cared and, cared about each other and you wanted to do this. And like I said, I just pointed you in the right direction and you guys just jumped and have been killing it ever since.
We went on to it. So
that was just the start.
I got a few people I just want to acknowledge right now. Jessica, she writes, is the app Mint like peppermint? Yes, it is Mint. And it's actually a website you can go to called mint.com. I'm not sponsored by them. Neither is
Me
Dean.
neither.
But that's just an app. And there's a lot of apps out there and a lot of websites and things that you can use. That's just something that I used. It worked for me for a minute. Don't think I've used it lately, but we've been.
Yeah, like I said, I used an Excel spreadsheet just to start. And it's just like you were saying with the categories. Once you realize, oh my God, I have 15 categories. I thought I only had 5.
It got a little.
And then you could plan on knocking some off if you want to. You have a plan of attack.
Yeah, but the app. I mean, if you're an app person, sometimes there's a few out there, and that one worked for me for a while. My sister Shivani, she says, for refunds, the usual verbiage used by companies is to be reported in a timely manner. A timely manner is defined in banking as 3 statement cycles, like Dean just mentioned. Oh yeah, I like that. My sister is in finance as well. She's awesome, and I love when she chimes into this because she understands it, and and I love that she's patting you on the back right now.
Thank you.
And then my dad.
Other thing about the budget, the final thing I just wanted to say is that you guys were committed to it. That's why it worked. It wasn't really the details. It was that you guys were committed to it, and that's what it was.
Well, we were committed, but I mean, there were some nights that we had a few beers and we're like, fuck it, order a pizza. Like, that's so true though. And
but see, at least if you do that, okay, I'm gonna splurge today and I'll make it up later. At least you have a plan. You can't splurge all the time, so it helps a little bit.
Yeah,
and in your mindset.
My dad jumps in. He says, "Be sure to quote unquote pay yourself. Monthly savings are important once the bills are paid." Okay. And we're gonna get into that as well, Dad.
Yeah.
Marlene, she says, having a goal makes paying bills and checking your credit easier. I actually enjoy paying my bills because I see my credit go up and my debt go down. And it's true.
It's a great way to look at it.
She's all it's funny too, because there's times when she'll literally text me and she's like, credit score went up 4 points. I'm like, I
Wow.
love it. I love it that you're jumping into that. That's awesome. Um, and she also says that the board was the best thing.
Yeah, that's what I said.
That worked for us so well. So leaning from budgeting, we're just going to pivot very quickly into a topic called emergency funds, and I think that these pair very well because budgeting is where you got to start for sure. You have to know where you are. You have to be able to know what's coming in and what's going out. You have to take that photograph, that snapshot, so that you can move forward with your goals. And I know we have talked before about the importance of emergency funds. So would you mind, just going into a little bit on how important that is, what we can do to get ourselves into that point?
Right. The emergency fund is so important because it's what you need to be able to invest. A lot of people ask me like, well, what do I need to do to invest? Well, basically you have to have your house in order. You have to have, your bills paid. You have to have insurance if you need insurance. You have to, just basically have your house in order. Mm-hmm. And that means having a budget means so you don't spend more than you're taking in. But the second thing, and a really important thing, is having an emergency fund. An emergency fund is 3 to 6 months of your fixed investments, but some people like to have at least a year or more. And what that means is after you've done your budget and you saw what your fixed expenses were, meaning your rent, your car payments, your insurance, your cell phone, whatever has to absolutely get paid as your fixed expenses, you should try to have at least 6 months of that in the savings account, at your bank, before you start thinking about investing. So for most people, that's, a few $1,000s to a little bit more. But you have to have a little chunk of money before you can start investing, because what happens is if I open an account for you or anybody opens an account for you and you start investing and you do maybe $100 or $200 a month into your IRA or Roth IRA, or you put a couple thousand into an account, if you don't have an emergency fund and then the car breaks down or the refrigerator breaks down or, the kid has to go to the doctor or something happens, one that just stops your investment and takes that out and, kind of ruins that plan. So I don't like doing that unless you have your emergency fund, because that's where that's being used. Mm-hmm. Another thing you can have is also the rainy day fund, but the emergency fund is the most important.
Okay. So you're recommending a minimum of 3 to 6 months of your fixed expenses in a savings account that you do not touch.
Correct. That's what your bank account is basically for. It's for liquid money that you can get, in a half a day if you need it.
Okay. And then, but with the emergency fund, is that something that you can use as? Is this specifically just like a savings account, or could this be any type of an investment? Would you use that money for any type of investments that you can still get out quickly, or would you literally just put it there just for nothing, just to don't touch it?
I would keep a chunk in the bank, just because, like I said, if something happens and you have to go to the hospital, or God forbid, like I said, you need your car for some reason, it's there. Even if you have your money in maybe a mutual fund, which is, you could have a conservative investment, it's still going to take a week to get your money, a few days, whereas a bank is today. Mm-hmm. That's what the emergency fund is for. Okay. If you break a bone or your car goes out, you need that paid immediately. So you have to have an emergency fund before you can invest. At least that's how I view it.
So I have my friend Alex. He says, Dean, downsize and save, or spend and invest? Your thoughts on cryptocurrency exchange? And I knew that we were going to get this, and we'll talk about the second part in a second, but the first part I was kind of curious.
Well,
Downsize and save, or spend and invest. So,
well, unfortunately, the answer is always going to be it depends. It depends on your situation. I don't know your situation specifically. And that's what I really like about my job. I get to meet with all kinds of different people in all kinds of different walks of life and different situations. Some people own property, some people own businesses, some people own many apartment buildings, some people have many children, some people have no children, some people have 3 stepkids and, extended families. So each situation is different, but interesting. Downsize and save. If you were a retiree and didn't have a lot of investments or growth ahead of you, that might be right. Spend and invest if you're younger and have some years ahead of you before retirement, that might be right too. So it just depends on your situation and really your thoughts about investing to your risk tolerance.
yeah. Well, I thought that was something interesting about our conversation when we first met and we went over some of the stuff that we're talking about today. I remember you were asking me, what's your, how much risk are you willing to incur? And I was like, I have no idea. I mean, I'm a musician, dude. I risk every night. But like that's very interesting when it comes to the investing side. Are you more of a high risk, because high risk is high reward, or are you a little bit more on the mellow side, where as long as I can just put in a little bit and keep it growing, then that's a good thing too. But I like what you just said about how your job, everybody's so unique, everybody's situation is so different, so that's the fun part, that you get to sit down and really see where they're at and help them find the best course of action with their financial future. I think that's amazing. That's so cool.
Right. And it's interesting because I could have 2 people the same age, from the same backgrounds, but one could be super conservative and one could be super aggressive.
Mm-hmm.
And you have to treat them completely differently because their expectations are completely different. So
Yeah. Well,
that's the hard part, but also the fun part.
That's the balancing act right there.
Yeah.
So to the second part of the question, I know me and you have had a conversation about this off of the camera, but what are your thoughts on crypto exchange, cryptocurrency?
Personally, I don't own any, and I don't plan on owning any, only because I don't completely understand it, and I don't invest in things I don't completely understand. There's a lot of people guessing on what will happen if it becomes more mainstream. And some people will probably get rich, but most people won't.
Mm-hmm.
I thought it was really interesting that China basically outlawed it a few weeks ago, Bitcoin. So, and they presumably would be one of the countries that would benefit from having the US dollar, being knocked down a little bit as the #1 currency in the world.
Mm-hmm.
But they have their own internal issues that they're dealing with, and they're trying to kind of tamp down on their Chinese capitalism. It's kind of interesting how they've really seemed to put a lid on some of these internet companies. So we'll see what happens.
Yeah. Well, I do like what you said about not investing in things that you don't fully understand. I think that's where you get the people who, like you said, they can get rich quick or lose a bunch. Sometimes you jump into something and you don't fully understand it, and at that point it becomes luck. But you've been how long have you been a financial advisor?
I've been an advisor for about 7 years now.
Okay.
Before that, I've worked at a couple of different companies in their annuity and life insurance and marketing areas. But I've been in the industry my whole career. So, 30 plus years.
Yeah. Okay. And that's awesome. I love the fact that when we came in and when we met with you, it was more, okay, this is what I know. And there are questions that I had that you were like, yeah, I don't know the answer to that because I don't know that field that well. And I love the fact that you were just so honest about it. And that's kind of one of the reasons why Marlene and I just felt so comfortable working with you, because you're an honest dude. You're not gonna tell me things just because you think I want to hear them. You know what I mean?
Yeah, like I said, we connected because I could tell you guys are good people and you cared about each other. And you don't come in and talk about things like that unless you care about each other. So
when you care about the future of, that's one of the biggest moments for us was like, okay, we're in this for the long haul. We've been together for a while, and I can't remember if we were married or not. I think we were married by then.
I
think
think
we
you
were.
were. Yeah.
And we were talking about it, and we're just like, okay, we're married. Let's we need to get this shit together. we didn't know where to go. So the fact that we met you at that moment was just, the universe saying, hey, this is the guy that needs to push you in the right direction. So
Well, that's that's how I get most of my clients, through referrals. So those are the best because you got that connection built in.
Well, that's one major reason why I wanted to have you on this show, is that we've been working together for a long time, and I want to, if I can help refer. Trust me, anybody out there who is listening to this, watching this, if you are in the Southern California area, I mean, yep. Dean's information is in the description above and below. His email, his home address. I'm just kidding. His home address isn't on there. But you can get a hold of Dean, and he. There are certain things that you might want to ask here, but he might not be able to answer fully because of legal purposes. It's a podcast, but feel free to reach out with him with an email, with a comment, or with a phone call, and Dean will get back to you. I guarantee you.
Call my cell number if you got a question. No problem.
Yep. Awesome. And then Marlene jumps in. She says, I remember when we came to see you, it was like you were speaking another language. And I just looked at Whit like, you got this, right? I've come a long way, Dean. And that's very true.
Well, I heard Marlene's getting her licenses, so that's pretty awesome.
She is learning an awful lot in the banking world. That is for sure. And she's kicking ass. But back then we went in there and Marlene was like, okay, a lot of this went over my head, but she was like, babe, you got this. And I'm like, I got this. Okay. How are we going to do this? She had a lot of faith and trust in me, and I'm glad she did, because I did.
You're a lucky guy.
I am. I'm very, very lucky, man. So emergency funds, let me move in before, my good friend, Bucky. Wow. Bucky. I haven't seen you. Bucky here. He, is asking about, what do you think of index funds, which I know we're going to get to, but Bucky, hang on. We got to talk about something right before we get into because we're going to be talking about mutual funds, index funds, stocks, bonds, all that good stuff. And we have to do it all in 15 minutes. So
I was going to say, how long do we have?
I'm just kidding. We can go a little bit over if time allows you, if you're okay.
Yeah,
with that.
I just can't get into a lot of specifics of those things, but we'll see.
Okay, perfect.
Where we go.
Before we jump into that, I did want to jump into, we talked about it earlier. Let's jump into inflation.
Right.
We talked a little bit about it off camera, and I think it's very, very important. So would you mind explaining a little bit of that and how it relates to what we're talking about?
Right. Well, inflation, as you all know, is prices increasing. And the reason why they're increasing are varied. It could be due to supply issues, due to higher demand, due to a pandemic, who knows what. But inflation is important because that's the real reason why people need to invest. I just read today on the computer, it said that Disneyland raised its prices to $164 today. And back in 2000, when my daughters were babies, it was $41. So inflation's huge. Another story I always talk about is, because I like to work on cars and, interested in cars, is that in 1970, you could buy a brand new Ford Boss 302 Mustang, and the sticker price was $4,400. $4,400. Now, if you bought a brand new Mustang today, that's the top of the line, it's at least $50,000. So you all know what inflation is. You see it in the prices that we're paying, at the gas pump. Food is ridiculously expensive now. If you've gone out and bought a nice meal or even a Jersey Mike sandwich, everything's more expensive. So you need to invest, and the only thing because the only thing that has consistently beat inflation over the long run is the stock market and investing in stocks. So if you invest in your bank and you're getting 1% in your savings, and inflation is 2.5% or 3% or more as it is today, you're actually losing purchasing power. So your money's becoming worth less. So you need to invest to build up your fund so you have money at retirement and you have some choices at retirement. That's what I like to talk about.
So if inflation is going up at 2.5 and you're putting your money in a savings account that's only earning 1, 20 years down the road, your money that you think is doing well is, like you said, your purchasing power is far lower.
Yeah.
Than what it would be if you put it into a mutual fund or an index fund or something else, investing it into something else.
Well, yeah, I mean, generally, if you invest in the market, you'll do better than that. And over the long term, the market has done pretty well.
Mm-hmm. Okay. All right. And then with moving from inflation, so now that we know about inflation, the last topic that I wanted to talk about was the basics of investing. And so knowing with the knowledge that if we put our money in our mattress, it's not making any money. If we put our money in our savings account, probably not making a whole lot of money either. But for the people that are ready to invest, or maybe they still have, like myself, maybe I don't have a 401k, maybe I don't have any type of retirement, and I do want to get in on that. I want to start working towards something, and I have enough money in my monthly budget that I can allocate to that. I wanted to talk with you a little bit about the differences between, and I'm going to name off a bunch of them, and you figure out which ones you want to talk about. Please let me know.
Okay.
We have 401ks that, as I understand it, are mostly from companies that offer that, not 1099 income people or entrepreneurs. IRAs and Roth IRAs. I know there's a difference. Right. Mutual funds, stocks, bonds, stocks and bonds. Yeah, those are the main ones that I kind of wanted to just throw at you and see what you think.
Okay, no, perfect. First of all, we're going to start with the basics. So in investing basics, we have stocks. And stocks, are just equity, their ownership. If you own a stock of, Apple stock or Microsoft stock, you own a tiny little piece of that company. You're an owner. And because of that, you get a couple of benefits. One is that if the company does well and their assets increase, then their stock price will most likely increase and you'll benefit from that appreciation. The second way is through dividends. Now, a lot of companies pay dividends, but most growth companies don't. So some companies like Microsoft pay, let's say, almost 2% or so, but other companies may not pay any. So it just depends on the stock. But the main benefit of owning a stock is that you're an owner of the company. So that's one way to invest. The other way to invest, most common way, is through bonds. And bonds are completely different. Bonds are actually a loan to the company. So the company sells you a bond, they're taking your money and investing it back into the company. That's what bonds are typically used for. So you're not an owner of the stock or of the company, you're actually a creditor. You're a lender. So you're lending them money, and they agree to pay you back through a certain schedule. And that's why bonds are liked for their stability and for their interest paying. So those are the basics of the two types of investments that most people are familiar with.
Now so you're saying that stocks, the big difference between those two, stocks you are part owner, and bonds you are lending the company money, and they're going
Correct.
to pay you back with some interest on that bond. Is there like an average of how a bond, is it like 5 years, 10 years, 20 years?
Yeah, they actually have what are called T notes and T bills, which are less than 10 years.
Okay.
And then T bonds are 30 years. So notes are 10 years and bonds are 30 years and bills are less than the 10 years. But they all pay a certain percentage rate depending on their term, how far away from it,
Hmm.
from the
Maturity
maturity
date.
date. So depending on that and depending on the interest rate, you'll have a certain price for the bond.
Now, do bonds pay out annually or monthly, or just at the end of the bond?
They pay out quarterly. So let's say you buy a bond, and typically the par value, what it's worth at the end, is $1,000.
Okay.
So you buy it today, and let's say, just for example, it costs $500. If the interest rate is 5%, they'll give you $50 every month. Every year, and at the end of the time, you get $1,000 back. Usually, it's
so
10
you
years.
get your investment back.
Yeah, well, you put in 500 as the price, and at the end of the bond maturity, you get the $1,000 back,
Oh, okay.
along with the interest that you got every year. But that's how a bond works, and you could get them from the government, or corporations offer
Is
them
it?
also.
I'm curious because it's I remember being a kid and hearing a lot about bonds and government bonds, but nowadays I don't really hear a lot about bonds with investing, and maybe it's the circle that I'm in. But are they still relevant? Are they still popular?
Yeah, the reason is the rates are so low is that bonds are not attractive. So there's actually a saying right now in the market called TINA, TINA, there is no alternative. And what that means is because rates are so low and other investments are unattractive, that's why the stock market is doing so well. And that's partly true. But the Fed is going to start adjusting their policy probably very soon, if not the end of this year, then next year, where they'll let inflation start to rise gradually. But that hasn't happened yet, so it may not for a while.
Yeah. So my friend Alex, and he says, in your experience, what type of investment market have you seen most successful with your clientele? Is it more property like real estate, or franchises, or stocks, etc., bonds,
Right.
mutual funds, things like that? Is that something that you can answer? Is that something that is more of a personal question?
Yeah, well, with my clients, I only do securities, so that only means stocks and bonds and mutual funds and those things. I do have a lot of friends and a few clients who are realtors, and those guys, they want to invest in properties. You can't blame them. They don't want to put a lot of money into a 401k. Their belief, and rightfully so for them, that the property is going to be their retirement. At least most of the realtors I've talked to. So it just depends on what you're looking for. That's not my area, nor are franchises. But stocks have done really well. I mean, if you look at stocks throughout history from the 1930s, they've done very well, consistently up. But even since 2008, we've just about doubled. So I think actually even more. The S&P and the Dow today hit all-time highs. So there's never a bad time to invest, as long as you're doing it for the right reasons. And most of my clients are doing it for retirement. So we have a little bit of a longer term focus, and having a longer term focus allows you to be a little bit more aggressive, depending on your baseline of risk tolerance. So it just depends. I mean, I'm sorry to say, Alex, but the answer is always, it depends on the client, and I have to talk to them and get to know them a little bit before I can say what's best. But there's nothing wrong with real estate. There's nothing wrong with, franchisees. It's what's right for you.
Well, here's
and what you want to invest in and have your heart in.
Well, I know when you were talking about like the stock markets and so for the person who maybe they want to get involved, but they don't know what stock to pick. They're someone who's like, I have some money that I can allocate per month to invest. My emergency fund is good, my budgeting is good, and I want to be able to put some money into my budget so that this is something that I can invest in. How do they start off with picking a stock? Do they go and just close your eyes and touch? Oh, hey, looks like I'm investing in Disney. Like, I don't know. Or is there a difference between just doing that, or what's the? I don't even know exactly how I'm supposed to say this, but a mutual fund, isn't that a like a pocket of stocks that you can invest in?
A mutual fund is where you hire a manager to pick the stocks for you and their bonds. And, we could talk about that later, but that's all it basically is you're pulling your money together to hire a manager, and then they pick the stocks for you. Okay. They're good because they offer a lot of diversification versus, you picking 3 or 4 stocks and they have 200 or 300 in their portfolio. Okay. So that's one of the reasons, is just the diversification. But yeah, I mean, if someone, like you were saying, didn't know what to do, I would say talk to somebody and get referred to a financial advisor, because you sound like you're in the perfect place where, like you said, if your emergency fund's good and you've got, your insurance on your house and your cars. One thing I do want to say, and this is what I went over with Whit and Marlene also, is that if you are married, you should have some life insurance for your spouse. And if you have kids, you should have some life insurance for your kids. You don't have to, but I just think you should in those cases. And obviously also, if you own a house, you should have a little bit of life insurance. Whatever you want, but you should have at least taken care of that responsibility before you start investing in other things.
So I have my friend, this is Janice. Janice says that if a bank lien is put on your band accounts, then you won't be able to withdraw your money from the accounts. But she also says, enjoy life and protect your money. Love your fans. So is there would banks not be a safe place to put it?
No, banks are okay, but they typically would refer you to one of their financial advisors in-house. A lot of banks have them in-house now. Mm-hmm. And some of them are good. It just depends. You have to find someone you connect with. I think that's the main thing. And like you said, someone who you can trust and feel you can talk to.
Absolutely. Here's an interesting question. Michelle, she says, are bonds insured, or can companies file bankruptcy on their bondholders?
Bonds are not insured, but the U.S. government bonds the government has never defaulted. So the U.S. government bonds are as good as gold as long as they, pay the bills and don't not raise the spending limit. Mm-hmm. But other companies that issue bonds, they can go out of business and then the bonds are in default. So if you buy a bond from a company and then they go out of business, then you're out of luck, basically.
Okay. So make sure you know the company before you buy the bond.
And that's why, have you heard the term junk bonds? Those are what are called high yield bonds. And those are from companies that don't have such good credit rates. So that's why they have to pay higher rates to attract money. Okay. And they have more risk for that reason.
And then one more question from Alex. He says, your thoughts on Tesla hitting 1 trillion?
I think Tesla is way overvalued, but it doesn't matter because, the stock went up. It was, I don't know what it is now, but Ford is worth about, I think, 42 or 3 billion, and GM was worth about 58 billion. And I don't know about Chrysler, Stellantis anymore. Mm-hmm. But basically, Ford and Chrysler are worth 100 billion, and Tesla's now $1 trillion. They're at 900 billion. It's amazing. But they just got an order from Hertz. That's why they took the big jump. And if it all works out, then it might be worth it. But right now, I don't know. You'd have to. That's pure speculation.
Yeah.
I don't know.
Well, it's funny. Have you ever been in a Tesla?
Yeah.
Really? I've never been in a Tesla.
My cousin has one. They're very plain, but they accelerate very quickly because of the torque. A lot of torque.
But listen, if you're important, people will wait for you. So I don't need to get there super fast. So
well, I just couldn't have it. I mean, as a second car, it's might be useful, but I can't have it as a primary car.
Well, you said that you work on cars, so I'm assuming that you're more into the classics, into the
I like to.
I'm with that. Even though right now I'm driving a Scion because I'm trying to save money. So
yeah, nothing wrong. Hey, nothing wrong with not having car payments.
I've got goals, and it's gonna happen. So, very cool. All right, awesome. And then so to tie a little bow on this whole conversation right now, let me back up here and take this banner down. But because there's so much that we can talk about. There's so much, so we can't really dive into everything, or we'd be here literally till next week. So that's kind of why I wanted to talk a little bit about your background, get into a little bit of the basics of investing and budgeting and emergency funds. So if you had the opportunity to give people 3 tips for what would help them get into a better point to invest, and then once they get into a point where they can invest, what would be the first step for them to jump into something? What would your recommendation be?
Yeah, just start. Talk to an advisor and start doing a Roth or start doing an IRA. You can start with $50 a month, even $100 a month. And once you start doing that and get used to seeing statements and seeing your account value go up, and yes, it's because you're contributing money, but you'll also learn how the share values are calculated and, get into all of that. But it's really interesting. I think, once you get into it, you'll see, okay, this is, the dividend, this is how much it went up, this is what, I'm earning for this quarter. And a lot of people, once they learn, they really do get into it more and want to learn more. So it's a good thing to just start, even if it's $50 a month. Mm-hmm. And then you'll see like, okay, next year I'm going to make it $100 a month or whatever. But just start. If you got a W-2 job, you have to be contributing to your 401k. If you're not, you're just losing time. If you contribute to your 401k, you can take advantage of compounding interest, and over time, you'll do better. And that's the other reason why you should have a retirement account. I know we didn't get into it, but an IRA or a Roth, the reason you want to do those is because you want to invest and stay ahead of the market. You're going to be in the stock market, but also because you're going to get tax deferral. That's the advantage that the government gives you in these retirement plans, is that you get tax deferral. And that just means you don't pay taxes on your gains every year. You wait until the end. And then as you take it out, you pay your taxes as you take it out. So that's the big advantage of having a retirement plan, is that you get the tax deferral also.
But if you take it out all at the same time, you have to pay taxes on all of it?
Right.
But you have the option of taking it out monthly or annually.
Right. The plan is, you build up a big account, whatever that means to you by the time you retire. And then as you retire, you start taking it out a little at a time as you need it.
Okay.
And hopefully you're at a lower tax bracket, but you may not be. So the idea is to, grow your retirement nest egg as big as you can. And I like to say, and have different buckets so you can have choices. So you can have a 401k, and maybe you have a Roth IRA, and maybe you have some permanent life insurance. So you have different choices down the line on what you can do if you need to take money out.
Awesome. Well, hey man, I just want to say thank you so much for spending your Tuesday with me. I know your time is very valuable and you're very busy. And we've been playing phone tag for so many months.
Yeah, thanks for having me.
Hey, I'm aggressive, man. I'm like, damn it, you're gonna be on my show, damn it.
No, it
But
was great. It was actually good seeing you at the cities. I plan on heading out soon. I know you got your residency starting next week, I believe, right?
yes, indeed, we'll be
Yeah, I'll be
there
out there.
in November 4th.
Yeah.
Steel Rod will be playing at Cities in LA and on Thursday nights. And Matt, yeah, it was great seeing you and connecting again, and kind of just fun telling you about some of the things that we've been doing and our achievements and our celebrate those and have some fun. And but then also still stay connected with. Okay, we're still working. We're still doing what we got to do and moving forward with that. So, if I can tell anybody out there who's listening or watching, y- whether it's Dean or whether it's someone that you know that you trust, find somebody that is knowledgeable in these areas that can give you the guidance that you need. Because it drastically changed my life, and I'm just so grateful that Dean that you were on my show with me. Appreciate you dropping knowledge here. I appreciate you.
Hey, thank you, man. I appreciate it. And we'll have to get together and talk about some of your investments too. But I'll definitely see you out in cities in the next couple weeks.
Absolutely. All right, guys. Ladies and gentlemen, thank you guys so much for tuning in to the 5 Foot Viking. I want to thank my guest, Mr. Dean Kumagawa. You can find his information above or below in the description. Please, if you have any questions for him, please reach out. As you saw from the last hour, he's a great guy. He's a lot of fun and he knows a lot. So please don't be afraid to reach out and ask any questions that you might have with your finances. And with that being said, I think I'm done. I gotta fix my wall. Everything's falling off as I'm back here, but
Like my wall.
yeah, right, yeah, your wall nice and clean. But Dean, I appreciate you being here, and thank you so much, everybody tuning in. And I think this is how,
Yeah, thanks everybody for joining us. It was fun.
and I think this is how you end it.
See you.